Welcome back. Shares of the deck maker Trex are lower today, 2.5% or so, as the president declares higher tariffs on Japan and Korea. Companies already taken steps to mitigate the tariff impact, but is it enough now? Let's ask the CEO. Bryan Fairbanks is CEO of Trex. You're here with me on set, which I appreciate. It's great to see you.
Great to be here. Thanks,
You're
Kelly.
so tall in person. I know people talk about that. Anyway, so now we have Japan and South Korea. We talked last time actually about how railings was going to be a big area of growth for you now. With all the steel tariffs happening and all the rest of it, is that derailing the plans somewhat?
Right, so it's important to keep on top of all of the tariff news that's coming out. But less than 5% of our cost of goods sold is impacted by tariffs. So the announcements today really don't have too much of an impact. Where we do have impact is some other Asian sourced materials where we'll look to either source to other areas with lower tariffs, negotiation with those same companies, and then eventually some pricing to be able to cover whatever tariffs are there.
Can you bring us all inside? I don't know if we call it the boardroom or the airplane or whatever. I mean, how do you negotiate that when every day we could get different information on what tariff rates are for different countries in Asia or elsewhere? Yeah,
that's the challenge. And I think a big part of it is sitting back instead of reacting immediately when we see the news, go and say, here's what we must do as an organization. We took the tack that we figured there would be a number of changes with the tariff regime that's in place. And we have seen that since then. We would take the time to do the negotiations, understand, can we source it somewhere where there will be a lower tariff or back to the U.S., and then eventually we'll take pricing. So we've taken a pretty conservative viewpoint of it, but we're getting closer to where those decisions will be made.
A math question. The cost of your goods has gone up by X, leading you to pass along XYZ% to customers, and take what percentage on margins so far?
Yeah, we really haven't had to make that decision as of yet. We have a strong continuous improvement program inside the company. It's worked well for us for many years. We challenge all of the costs that we already have in the business. How can we be more efficient so that we're not passing dollar for dollar cost increases coming through?
Question about the broader housing market as all this is happening. We know turnover is very, very, very low, but there are some signs in some of the home builder stocks and elsewhere. Maybe people are a little bit coming back to the remodeling space. Can you tell us anything about that?
Yeah, what I'm very encouraged by is there are signs that there's pent-up demand in repair and remodel. We've had a couple years where it's been negative, and over time, repair and remodel tends to even out. Whether it's 6 months, 12 months from now, when we really start to see that come through the economy, tougher to say on that part of it, but there's definitely signs of pent-up demand. And of course, we have an aging home stock as well, too. That only continues to get older and older.
Tell me about it.
More of these repairs will need to be done.
Do you think higher prices, or I don't know if this is contributing to any supply delays, is that potentially a headwind to spoil that recovery, or do you think that recovery remains intact?
It's keeping people in their homes rather than moving to new homes, and that repair and remodel will be done either way. I would prefer to see existing home sales increase. That tends to drive repair and remodel on its own,
right.
But that's not something I'm counting on right now.